And what I thought I'd do is kind of spend the bulk of the time on our views for markets for the remainder of this year and beyond. And as a starting point, here's what I'd say. We are bullish on equities. We think that the remainder of 2018 is going to be a pretty good year for equity returns. We have a price target of 3,000 on the S&P 500, so I think there is some meaningful appreciation from here. And in a word or two, the reason for that bullishness is corporate profits. And I think everybody's aware that we've been in this really strong earnings environment now. The profit cycle troughed in the first quarter of 2016, and earnings in the U.S. and really throughout the world have been rising ever since then, and they continue to rise and they continue to accelerate. In the quarter that just wrapped up, S&P 500 earnings were up over 23% on a year-over-year basis, and we think in the second, third, and fourth quarters, earnings will continue to accelerate from there. By the end of this year in the fourth quarter, based on our earnings number, we could see S&P 500 earnings up over 40% on a year-over-year basis. And the reason why I mention earnings as part of our bullish case is because if you think about securities valuation, at its most basic or simplest level, it really boils down to two things. How much is a company earning, right? Or profits or discounted cash flow or some form of profits. But secondly, interest rates. And so we're in an environment where, yes, interest rates are rising, and I'll make that case in a few minutes, but we think that earnings are going to outpace and be able to compensate for the higher funding costs for companies. So all in all, we are pretty bullish. As we get into 2019, however, we think returns are going to be harder to come by, and the title of this presentation is Triumphant Equity Returns Are Over, because we think the case in 2019 is going to be more difficult as earnings slow and yields continue to move higher. We were asked the question about why triumphant equity returns are over, and there's a lot of adjectives that we could have put at the beginning of this presentation, but triumphant was the only word we could find that had T-R-U-M-P in it, so we ran with it. But the point is, I think the rest of this year is going to be really pretty good. And as we move into 2019, we think it's going to be much harder to, the returns that we've experienced over the last 8 or 9 years are going to be much harder to come by. We see below equity type returns in 2019 and beyond. That's not to say it's the end of the bull market. We don't think this is the end of the bull market. We think that this economic and business cycle are going to continue for a while now, but I think companies are going to be plagued by higher rates.